The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and we have another round robin on the host table here, but it's always pretty fun to see who's going to be joining us this week. We have one of our original hosts back, John Grigas from Options Express. John, good to have you back on the show. It's been a while.
Good to be back. I miss you guys. You guys are like my extended family. But a little upset I hear Mark isn't here. Mark Sebastian is out today?
Yeah, he was supposed to be joining us from, I guess, his local Starbucks. I guess he was making his daily latte run, and apparently he was waylaid somewhere in between. Maybe he didn't have enough money on his Starbucks card, and they finally just arrested him. They said, enough of you and your debts to Starbucks.
Quit using our free internet and get the heck out of here.
I can't see hosting an options show from the corner of your local Starbucks. It might be a little unruly for them. I don't know.
The baristas got him out of there.
That or his quotient of 80s references was too much even for them, and they tossed him. All right, and with that, we will dive right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is the segment of the show where we discuss what's interesting, what's going up on the tape right now in terms of the broad market and the macro trends. Overall, it's an interesting day in the market. You know, S&P down about 5 handles on the day, Dow down about 74 points or so, NASDAQ 23, VIX cash pretty much unchanged, up about 0.17, so about 1%, not even 1%, so roughly unched on the day, the VIX cash. You guys are more of the silver and commodity hounds. What's going on out in gold and silver land today?
Maybe it's not so much today, but 2 days ago, if you look at the average daily range for SLV about 2 days ago, it was just unbelievable. It was like, I don't know if you ever watched now I'm going to pull up a 60s reference here, the Addams Family, when Gomez would have his little stock ticker tape or whatever, and then all of a sudden they'd go from being bankrupt to millionaires and like every couple of seconds. If you just look at the average daily range of silver a couple days ago, Gomez would have had a field day with that. It was like it was about a 10% daily range with it. It started up higher, it went down, it came back up. It was just unbelievable how much the action was going in silver.
Were the Hunt brothers coming in to corner the market again? What was going on out there?
That's a great reference. It was nice to hear a couple people on Tuesday actually mentioned the Hunt brothers. That's the type of day it was. That's the type of energy that we felt on the phones in talking to traders. Silver, East front month silver up 83 cents today, which in itself would be a huge day. This contract trades for about $50 a penny. So you're talking some big numbers just today. But Mike, what was it, like a $3 range? I think at the high one time it was going for that 30 psychological mark, 29, I'd say 40 area, and then within a half hour, 45 minutes, it traded all the way to its lows of around 26.43. So you almost had a $3 range in silver, which is something you see about once every 7 to 8 years, I'd say.
Amazing.
Yeah, that was something. It almost seemed as if it almost seemed as if the all the big players that were in silver, it almost felt as if they're saying, okay, all the retail people in silver are in silver now. Time to get out. April Fools, everybody.
Yeah, playtime is over. We were trying to find catalysts, that preempted that sell-off. Market news fundamentals, not too much. One thing we did see shortly after that was a lot of clients were calling in trying to find out if the requirements were going to change. So CMEgroup.com, go onto their advisory notices and notice that at about 12:30 Central, they put out an advisory notice for their bonds, the margin that you have to have to hold one of these contracts. They were adding about roughly 20% to the margin requirements. Now, if you take a look at a silver chart, silver has gone up huge in the last 2 weeks, 3 months, beginning of the year, how far you want to go out. But really, it's moved up great in the last 2 weeks. So you have people here that are long silver. I mean, who do you talk to right now that's not long some type of precious metal? You have people that are buying long silver that are then seeing those unrealized gains using those funds to buy more. They're pyramiding into it on the way up. So those people, maybe they're taking some profits. So you got a little bit of selling coming in there because this thing is, in one day it was up almost $2. You got an exchange that puts out an increase in margin requirements. So they're going to have to liquidate. So, I mean, and then maybe it's a top. So maybe I'm opening a short position on there. Those things that we put together, we think is why that market sold off about $3 there in under an hour, I'd say.
Interesting, because that shows kind of the push-pull that's going on over at the CME as well, because I know they're banging their heads against the wall trying to find out ways to bring more smaller players into their products like silver. And yet at the same time, they have to make moves like this. For whatever reason that they had to tamp down on some of the speculation going on out there, that they would raise the margin requirements, thereby obviously limiting how many of the smaller players could come into play in that product. So interesting dance going on out there. Mike, I know you collar silver quite often. Were you getting stopped out in those puts? What was going on out there?
I got called out a while ago on it, so we're looking to get back. We lucked out on that day. So, yeah, it was one to where, we were pretty much we weren't a part of it for this one. So we've been out of silver for a little while now. We've missed a bunch of the rally, and so naturally I have the hedge man's blues of waiting to get back into it on a pullback, which we did okay with it last month on most of our accounts that have silver in it, and so for the most part it's. We've missed the big 50% rally, but we've been a part of a pretty decent portion of it. So we're happy with that. But, that was a day that I was just looking at it. I'm like, well, I'm glad we're not part of this drop right now. But even if we were, it's days like this to where I'm very glad that we believe in hedging the precious metals. Yeah,
that's the dark side of collaring, is that you may miss some of these explosive upside moments. But, of course, try explaining that to your clients. Why did we miss out on the 50% upside? That might be an interesting phone call. And also in other macro events going on right now in the market, looks like a lot of interesting stuff on the home and on the Treasury front. We're seeing the 30-year rate just hit 4.17. That is the lowest since Freddie Mac started keeping records way back in 1971. So it's pretty much a 40-year low. On the 30.
That's unbelievable.
It's amazing. It's unbelievable. And not surprisingly, U.S. home sales rose the most on record in September, so things are starting to stabilize. But yet, at the same point, median home prices fell about 0.2% in the third quarter, down to like $178,000. So even with all these bullish signs for housing and finally maybe starting to turn around, the worst is still not over because housing prices are still coming down quite a bit. But 4.17, how can you not refinance? When we bought a new place about a year and a half ago, we were lucky to get 5.3, and now I'm even looking to refinance that because that's just ridiculously low.
I know it's unbelievable. It's shockingly low, and there's some good things. Obviously, if I was planning on being in my house for an extended period of time, you'd have to be silly not to put on a 30-year. And you've got to think people that are buying now that are smart enough to lock in a rate are going to be, they're going to have so much extra kind of free cash down the line as these rates run up. It's just unbelievable. So
and they can't save that cash because there's no savings rate. So
right.
The government's forcing them to get out there and spend it. And get back into the cycle that we just got out of, I guess.
Obviously, the other big drag on the market today is Cisco, and a lot going on out there. We will, what is this Cisco you speak of? But we'll get into that in depth in the odd block. So I think with that, we will close out the old trading block.
The interview block.
All right, and welcome to the interview block. And this is the segment of the show where we bring on someone who's active out there in the options and financial world, and we pick their brain apart piece by piece. And today's victim is Tadas Viscanta. He runs the Abnormal Returns blog. Tadas, welcome to the show.
I'm glad to be with you guys.
How you doing?
Good to have you.
Mr. Sebastian, I know you have a lot lined up for Tadas. I'll let you get running, and we'll go from there.
Oh, tons of stuff. So, Tadas, first off, why don't you tell us a little bit about how you got into kind of the blogosphere and, what Abnormal Returns' goal is. And then after that, maybe we'll talk about StockTwits real quick.
Well, Abnormal Returns has been around for 5 years now. We just had our fifth year anniversary a few weeks ago. And
Happy anniversary.
Thank you very much. It really started out of a desire for me to really just to have an outlet for some of my thoughts on the markets. And I've been involved with investments and finance really ever since I got out of school. So it's been it kind of dates me, but I've been at this a long time in various forms. So that was really my desire. And it's really kind of, it didn't take long for me to evolve into kind of the form that it is today. And it's really, our main product is a link fest that comes out every day and has garnered a fair amount of attention from people in the blogosphere, and people seem to like it. And we've over the past year or so, we started doing other things like we've got a weekly show on StockTwits TV and do some other media as well. So really kind of trying to branch out into trying to reach people in a number of different ways.
Yeah. Now, what is kind of your process where you look at something and go, this is something I want to put up on my LinkFest, or, this is not? I mean, how do you kind of decipher what people want to read? What's your process?
It's really the stuff that I like or find interesting. It's really not any more complicated than that. I don't feel like, there's some stories that are really well covered in the media that I just don't feel like there's there's really anything I can add. So I'm really looking for items that, either explain things well, bring out new insights, have a bit of, contrary take on things. So I'm really looking to, hopefully, for people reduce some of the noise and try and make what can be a bit overwhelming for people when you look at, the financial media and the blogosphere, and try and hopefully distill it down a little bit.
Now, Tadas, I'm just looking at your site here while we're talking, and I know you mentioned the StockTwits TV stuff. Do you guys do any other original content, or is it still primarily the link aggregation?
Well, I do the Link Fest every day. I do just about every day. I do kind of a screencast. We have there's a neat feature over at Chartly which allows you to do a 5-minute screencast. And in addition, we do the TV show, and I also do some original posts as well. I actually had a post up yesterday talking about, this Kaufman report on the ETF industry. So when I can find the time, I do like to do some original writing as well.
Oh, that brings up that's a great segue, Tadas. That was a really interesting report on the ETF industry. It really, I think it raised a lot of eyebrows because it came out kind of, it certainly wasn't very pro-ETF. What were your thoughts on the report, and what was your reaction to it?
Well, it's a really long report to start with.
Yeah.
And there's kind of a lot of moving parts, and everybody is really focused on the ETF section, which I think is, which I think is appropriate. I think from their perspective, they really view the ETF industry as having some real serious flaws that have not only have the potential risks to the markets itself, but they also, I think they have a broader point to make about what ETFs and other trading mechanisms have on the capital capital formation process. And I think that's the one part that I think that they're, has kind of been put aside in a lot of this discussion. But, my take was, I think that, I'm certainly not an apologist for the ETF industry, and I've written, dozens of posts on, things that I find, particularly egregious in, the way ETFs have been, designed and marketed. But, net, I think, the ETF industry has been, a boon to investors. I mean, if you think about 5 years ago or 10 years ago, could an investor go out and, design a portfolio that's, diversified across, literally dozens of asset classes at, for, 10, 15, 20 basis points. And, these were the kinds of things where they were really only available to institutional investors, 5 years ago. So in that respect, I think it's really opened up a lot of opportunities for individual investors and traders that really weren't there not too long ago.
Yeah, part of me wonders whether this report was sponsored by the mutual fund industry sometimes, because, you say what you will about the ETFs. There are certainly ones that don't make a lot of sense, but, how do you think these things compare out to kind of 5 years ago when you basically had to go to a financial consultant and put a bunch of money in some fund that was charging you 2% annual, 2.5%, 3% annual, some of these active?
Yeah, no, I think that's right. I mean, I think it's a bit of, focusing on what could be potential problems down the road, whereas, I think we're taking a little bit more of a, taking a look at the forest versus the trees sort of approach. Okay.
Well, I know you do a lot. You certainly look at kind of the macro picture as far as what's going on. You're not an options guy, but you post options content. You're not, what would you kind of describe yourself? Are you a bond guy, a stock guy, an options guy, or just a kind of a jack of all trades, master of none guy? Where do you focus?
I think it's really the latter. I was lucky to early in my career to have exposure to a lot of different things, equities, fixed income, Forex, options. So, in that respect, I've had exposure to a lot of different areas. So, so that kind of informs kind of the way I look at things. I'm really, I think, if I have any sort of advantage is that I have the ability to look at, things across asset classes and markets and maybe make some sense of things.
That puts you in a really cool position looking at all the different asset classes and the different markets. Is there any kind of one asset class or market that you find particularly, interesting or tumultuous or where there might be opportunity? Are you seeing any section of the financial markets that pops out at you right now?
I don't know that there's one thing that pops out at me, but what I've found interesting of late, and I've talked to, you had Bill Luby on a few weeks ago, and I talked to him, and I've talked to Adam Warner about this, and we've, really kind of looking at the rise of the volatility complex, and, just in the last couple of days, we saw an announcement that there were, additional, VIX ETNs coming down the road, and I find that entire area really interesting, and the fact that, again, if we're talking about ETFs, these were products that didn't exist, 2 years ago. So, you can argue that, especially in regards to, some of these ETNs that are really derived off of the, derive their returns off of the VIX futures that, that Contango's really, really made a hash of what, what that product was supposed to be. But again, I think it's a really interesting area. And, again, that VIX model is being applied to, not only different asset classes now being, moving across borders as well. So.
Yeah. It's kind of interesting. Mark, Longo for the Options Insider, he actually interviewed, was it Charlie that you ended up interviewing?
The Volex guys?
Yeah.
Who's the CEO over there? Robert.
Yeah.
And that actually should go up. We have it in the can now. We're just cranking through so many shows. That was last week at the FIA conference. That should go up hopefully in the next couple of days and not early next week. And that was really interesting just from the perspective of someone finally coming in and answering the question that so many, high-end and professional guys have had is like, when can we get a actual realized vol product? And Mark, I'm not sure how much you've actually delved into their product, but they've kind of hit on an interesting way to make an actually intraday tradable realized vol product.
Right. Titus, I don't know if you've heard about this exchange that's opening up. If you are thinking that the VIX complex is interesting, these guys out in New York are starting a group of realized volatility products that will literally, you'll be able to trade through the end of the month bets on the close volatility over a given month. So conceivably, we could be trading what will November close volatility be on, they're going to start out with 4X, but in the SPX, what will close average volatility be for November? Right now, we could be trading it right now. It's really interesting and fascinating product. Do you think that something like that could that could conceivably be something that your readers would really kind of be interested in, right?
I think it is interesting. I think it's it's an interesting development, especially as a means to one way you could think about it would be being able to using that either as a hedge or being able to trade the spread between future implied volatility versus actual realized volatility. So I think it opens up some different opportunities for for people to to both hedge and to trade. But I think for the average it'll be and again you could see how that could be used as a basis for other products as well.
Well, definitely will be a lot of interesting, layoff and ARB paper going back and forth between those two products if the Volex stuff can ever really take off.
I'll be interested to see how that rolls.
That's what everyone down at FIA, everyone was crowded around that booth. That was definitely the hot topic of the conference. Well, Titus, we'd love having you on the show. We unfortunately have to kind of run, but we really had a good time bringing you on. And I guess maybe the last thing we can leave you with, or you can leave us with, we talked about the LinkFest and the screencast and the Stock Twit TV. What else is on the horizon for Abnormal Returns?
Well, I think we're always trying to iterate and always trying to, bring to people, make it easier for people to find information. So, that's always our goal, and that's kind of what's kind of driving us. So, we are, working on some stuff now. Unfortunately, I can't give the details of it, but it should be all along those lines as well.
All right. He's going to leave us with that cryptic message.
Always leave him wanting more. The man's a practice.
Yeah.
He's got media training over there from Abnormal Returns. But yeah, Titus, thanks for coming on. We appreciate it. We'll definitely have to bring you on again down the road.
Yeah, when you launch your new and cryptic fabulous product, we'd love to have you on again.
Well, there you go. Thanks very much. I appreciate it.
Thanks a lot.
Have a good one.
All right, and with that, we're going to close out the interview block, and we're going to roll right into the odd block.
The odd block.
Welcome to the odd block. This is the segment of the show where we discuss what's lighting up the tape today, and today is really one name and one name only, and that is Cisco. Cisco came out and essentially shocked the world with some bad revenue estimates. I think the street was expecting 42 cents. They came up with 35 cents and about $1 billion off of revenue. So pretty poor guidance going forward. So apparently the decrease in government spending really hurt them. And Cisco does an average of 80,000 contracts a day. I will put it out to you guys. What's your guesstimate for how many contracts they hit today?
I'll bid over.
I'm gonna go with the net 19. So
I'm gonna go with 750,000. So I'm gonna.
You guys guessing 19x, Sebastian?
Yeah, just 19. Just 19.
You must have looked then. You must be looking into the live ball right now because that's about exactly what it was. It was about 19. He's cheating. See, I knew Sebastian would cheat. Grigas, Tucson, then play ball. Sebastian, you're the guy who bids $1 on The Price is Right. You're that annoying guy.
That's right.
But yeah, they did about almost 1.6 million contracts today. So nearly 20 times actually. They were up from 18x this afternoon. Yeah, they usually do 80,000. They did 1.6 million contracts.
That is unbelievable.
Across the board madness, but the bulk of it seems to be heavily towards the bullish side. People seem to think this is overdone. Lots of out-of-the-money call buyers across the board, but primarily in the decent Jan months, looking at a lot of really sizable out-of-the-money call buyers. Also, on the flip side of that, we see put sellers looking for the same thing, looking for some bullish run on the stock. Saw some sizable selling of the Jan 19 puts for 41 cents. About at least 10,000 of those went up on that strike alone. But like I said, 1.6 million, you got 10,000 on every strike you can name. So it's kind of hard to pick any individual size trades except for the general trends of just enormous volume.
That is just crazy.
Everyone thinks this is overdone, apparently. What are you guys thinking about what's going on out in Cisco right now?
Well, I can't say that I completely disagree with them. I would not be shocked if this was some sort of bottom. Let's not forget what's kind of happened with BP. BP, yeah, the news was horrible. They spilled 1 billion gallons of oil. Guess what? It's more than 50% off of its bottom. Okay, you wiped off 16% of Cisco's value today. Is that really appropriate for missing earnings because government spending is down? Maybe not. Maybe not. So
yeah, I guess I probably should have mentioned that too. They closed at 20.50, down about $4 or 17%. So yeah, not a strong day for Cisco.
No, not on any level.
So my thoughts on I'm kind of with Mark in that. Full disclosure, I don't have any clients in Cisco right now. But over the course of the next few days, I'm looking at Cisco as this could be an opportunity. So I'm not saying one way or another way I think of it yet, but I think that it's a big enough name. When big names drop 16% like this, it's not always a bad thing.
Yeah, so let's hit on that then for a second. I mean, obviously, I think the consensus seems to be this might be a bit overdone. I know, Tusaw, you're a vertical call spread guy. Myself, I was looking here at all these people hitting these Jan 19 puts for 41 cents, and I'm kind of just scratching my head as to, obviously these people are still bullish to stock, but why would you go in there? If I was going to hit puts anywhere, I probably would roll a little bit sooner than that. I mean, look, you can hit the Nove 20 puts for 25, 30 cents if you're still bullish on the stock. You can roll them out to December for about 50 cents after that, and then roll them out to Jan again if you wanted for like another 50 cents. So you're probably do about $1.25 versus for the same time period versus 40 cents for these Jan puts.
Well, this is my guess is this guy's not 100% confident, and also not 100% with it. Not everybody is. The top.
You can relate, Ryan. You can relate, right?
I can. How did you know what I did? So no, I think it's interesting in that this guy probably is afraid of kind of a near-term continued pressure. Not out of the question, right? Do I think Cisco's going to drop below 20? No. Would I be shocked? Absolutely not. Will I be in there buying a bunch of, especially if somebody's in there selling a bunch of puts? I'm probably going to be looking to buy premium if I see something like that. If it drops into the 20s, do I think it's going to be a good buy? Sure thing. Right? So
yeah, I got to say the people calling in today we're looking at bull call spreads. We're fairly bullish on a very solid company here, but the elections also kind of scared people as the fact that they're going to continue to cut back on government spending. So retail seemed to be bullish too, but there could be some more bumpy roads in the horizon.
Exactly.
So Tusaw, which vertical call spread are you looking to lever into Cisco on here?
I am going to shock the world and get out of my vertical call spread box right now.
Say no more. The world has flipped upside down.
I know it's just shocking. What I'm looking at right now with Cisco is, what's your sentiment on it? And I think this might be a time with which, if you let's just as an example, if you look at the January 20 put, that's trading at 81 by 83 cents, or that was the last price of the day. So let's say you get in at that for 82 cents. By buying that, and then by selling the Dees 20 put, just doing a straight put calendar spread on that, the amount of premium that you're getting for that is 60 cents, 59 by 61. So with that, that's a 22-cent risk on the trade, assuming it goes to zero. And if we just get a little bit of neutrality in it, now granted, who knows? Cisco could be going through the roof. Cisco could go way up. It could go way down. Who knows? But this is something that, as a spec trade, I would look at as more of a I'd look at it as a very small amount spec trade, but it's one to where that type of a risk and potential reward seems attractive to me.
That's a new one for you then. You're kind of selling near term at the money and then going a little bit long term on the old time spread.
I mean, typically, that's not usually we're more along the lines of buying the stock and collaring it and hedging it along those lines. But coming into the spec trade side of it, that's one thing that I'm noticing that I think is pretty interesting right now with Cisco. And when we're looking at collars and that type of thing over the course of the next few days, we're probably going to be doing some type of a diagonal collar on it should we decide to get into it.
Mm-hmm. I was leaning somewhere in that same direction. Hitting the put somewhere in that D's 20 level is probably where I would begin any strategy and kind of go from there, because it just looks like
probably
a decent level to get into. So yeah, I think there's a lot of interesting stuff going on in Cisco. We could probably chat on it for days. I know, Mr. Sebastian, you do have to run. So really quick before you go, I know you said you were watching a big call spread going up in Amgen. I believe that was a no 55, 57.5 call spread.
Yeah, absolutely. You know, a customer came in. It was really brilliant. On the very bottom of the market, Amgen's just getting smoked today. Right on the bottom of the open, right around, was trading, I want to say, below 54.5. Looks like around 54.40. Guy comes in, buys 12,000 of the, or 11,000 of the 57.5 call spreads for 62.5 cents. All right. Then a report gets released with, shockingly, with some what seems to be kind of bullish, quasi-bullish news on a drug, that stock rallies back just about break even, unchanged, 54.60, 54.70. All right. Vol goes up from about 31 to 35, so good 10 cents in the call spread. Here's how much the guy liked it, or somebody else liked it. He bought another 6,000 of them. So we saw about 18,000 of these spreads trade. Now, Amgen's a big company, but they really don't trade that many options, on a daily basis. That's a huge trade. And just full disclosure, this was something I put out there on thestreet.com that I like this as well. Every day, me as an option pit, I have to write something for thestreet.com. This was actually my idea. My idea was to copycat this other guy.
I like what that guy's doing. That's a good
yeah. That guy seems smart. We like to call it the Gringus. Give him the old Gringus. So anyway, it was a really interesting trade, and with this, they've got this meeting on the 18th, which is prior to November expiration. And so this could be a really interesting cheap play on a drug stock that we, way ahead of time before this thing completely blows up. So that's kind of what I was looking at.
And they have an announcement or a drug coming out soon, an approval coming
18th.
up for them. Okay, yeah. So that'll be like I said, we always talking about these drug stocks on the show, and we're always talking about how they are so far beyond any sort of fundamental play, and it's all about regulatory and approvals and drug schedules and lawsuits. And if you have a handle on that stuff, it probably was a clerk, some law firm somewhere, or a clerk at the regulators saw that going up and mortgaged his house and did 10,000 of those spreads.
Yep. Well, it's interesting. If I was going to pick a blue chip stock out of the biotechs, it would have to be Amgen, right? I don't know that there's a better biotech. If you thought of any, if I said blue chip biotech, you would say that's crazy, and then you'd go, oh, Amgen, right?
I would certainly say they're better than Pfizer right now, who's
no kidding.
Everyone and the mother seems to be strangling out Pfizer. So yeah, that's an interesting one. With those two, we will wrap up the Cisco block, and we will roll right into the Express block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express block. This is where we all sit around the campfire and listen to Mr. Grigas tell us what is going on over in the exciting world of Options Express and what their customers are up to and what they're calling him with all manner of hours, day and night. So, John, you mentioned we obviously talked a little bit about Cisco. We can hit on that a little bit more. I know there's some other stuff going on, lighting up your boards these days. So, yeah, tell us, what's keeping you busy these days?
A lot of things going on. Like we said, silver at the beginning of the show has been the majority of our calls. A lot of people not trading futures and futures options because they may be timid about it or scared about it. I'd like to point out that if you're an established equity option trader, the same type of mentality, the same type of fundamentals, not 100%, but the majority of them do apply to options on futures. So, if you want to take that dive in, maybe metals might be the first step you want to take. But if you're not into trading futures options on metals, the SLV, GLD, great ETFs, those have been the majority of our calls this week. A lot of people say, hey, retail's the last one to get in, but people have been coming in, jumping on Tusaw's recommendation of the vertical call spread. A lot of people selling naked puts in there, taking advantage of this bull rally. Look at the chart. When people say, "Oh, hey, I'm going to sell this," why do you want to pick tops? Go with the trend. The trend is your friend. It's a corny phrase. It's overused, but it is correct. And look at it. 50-day moving average. Let that be your basement or your elevator up, and then continue to do that until you see that the trend has stopped. But a lot of the calls on the metals.
Let me just stop you there before you keep going, because I am amazed by how often you and Tim and Rob bring up the futures and the metals on here. I think everyone...
Too often or what?
No, we love it. I'm amazed just from, everyone's first impression of Options Express is, your Apple options and Google and maybe a little bit of VIX and some SPY. But Tim said last week on the show, I believe, that 30 to 40% of his time and his questions he's getting and the calls are futures options and just commodity products in general, which I think to a lot of our listeners is just amazing.
I think one of the reasons Options Express had such great growth, in the mid-2000s, 05, 06, was because we gave the professional tools of a floor trader, of a market maker, to the retail investor. We gave them Black-Scholes, gave them Greeks, we gave them advanced charting tools. That type of information at the tip of your fingers was exclusive to the floor trader, and we gave it to the retail client. Well, we've kind of done that with the futures and futures options. We're kind of the premier site for trading those types of products. The growth that we've seen in options and equity options, we're now seeing in futures. I'd say on Tuesday, we put on some huge volume as far as numbers of trades in futures and futures options. Of course, it helps when you have, vol shoot through the roof in the metals complex. But, that type of trading functionality, that type of platform, we're that sophisticated that you can get in certain types of trades where you can't in other places. We have that availability, and so people are using it, and when the timing's right, they're jumping on those types of trades. But, I think maybe Tim had talked about cotton last week.
Tim always talks about cotton. Tim's a cotton man. He's like Eli Whitney over there on the show.
You think he owns a cotton farm or something. But he he talked about it. I think Rob has talked about it. Rob is one of our Kurtzikowski, one of our in-house analysts, writes half of the Espresso newsletters, and I think Mark Longo posted on his Options Insider.
Yeah, we have that up every morning. The Espresso Futures Roundup. Yep.
I mean, to have that type of insight, Rob and Tim combined, they got over 20 years of futures knowledge, and that is actually both of their backgrounds before coming over to the equity side. So, this week alone, I think Rob is doing 3 to 4 interviews. He's doing a podcast next Wednesday, I think, for TheStreet.com and some other webcasts. But that type of knowledge is hard to find these days, especially for those obscure markets like cotton. If you take a look at that cotton chart, I mean, the thing has gone parabolic. It almost looks like, the silver market here over the last couple of months. But to get back, the futures things has exploded on our site. But that isn't the only thing that's going on as well. I don't mean to jump back into futures again, but if you take a look at the interest rate futures complex, the 5, 10, and 30-year note and bonds, we've seen a lot of people starting to come into this market as well. Sometimes they take their profits in silver and they say, what's my next high probability trade? Where do I see an advantage? Where do I see an edge? Just as a floor trader, say, hey, where do I see an edge? Where, in the markets, where can I use my knowledge and the platform that I have to give me the highest probability of a successful trade? Well, if you take a look at that 10 and 30-year note, you're going to see that through the first 6 to 9 months of this year, they've gone lockstep, right up. One goes up 30 points, the other one's up 28, vice versa. As of the last 2 to 3 weeks, you could see with the Fed intervention that long bond has there's been some divergence. The 10-year note has stayed on the 50-day moving average. If you look at a 6-month daily chart of the 10-year note yesterday, it hit that 50-day moving average on the nose and then finished on its high of its days. I've seen that happen before. If you look at that 6-month chart, you can see it's happened twice before. This is the third time, so maybe the fourth time, it's weakened it up and it might go through it. But if you look at the 30-year, you could see that it broke through the 50-day 2.5 weeks ago. And what I'm hearing, from doing research and looking at the charts, and what I'm hearing from the street is that 30-year bond may be oversold. And I'm seeing a lot of people start to look at, putting on a long 30-year bond, short 10-year note, so that spread, I think they used to call it what was that? They called it on the floor,
knob
Mike?
Spread?
Knob spread.
Knob spread puts over bonds, or?
Yeah, it's so they think that spread is going to narrow. And if you look at the chart and look how it's gotten the divergence there, it looks like it may snap back. So we've seen a lot of people have been talking about the bonds and starting to size up that trade. Another interesting trade that I saw come across this week as well. Not promoting this trade whatsoever. Just want to talk about it because it's a good example of how people will see trades and they say, I can't lose on this trade. Now, if either of you ever heard that, someone use that phrase, I cannot lose on this trade? We usually hear that, in the 30-minute infomercial at 2 in the morning.
We get that about 10 times a day into our email, I would say, and to the forum posts and everything else we could possibly.
Yeah. I mean, there's never a trade that is a I can't lose trade. Okay, that means you haven't done your homework and you haven't looked at it enough or long enough or stared at it or asked for help. If you guys have a chance, and I'm not sure what you have in front of you, but take a look at MELA. I think it's a small pharmaceutical company.
Mela Sciences Inc. They closed at about $5.94.
They're trading at what, about
90 cents? Yeah.
Okay, so you could put on a box spread here, selling the $2 call, buying the 6, selling the $6 put, and buying the $2 put. Now, Mike, what's my max gain on there? What's the most credit I could sell that for, in your opinion? It's a
Which
$4
month are you on?
November.
That's $4. Oh, November.
Okay.
Sorry.
Yeah, you're right. You're right. But price it up. If you bring it up, you can see this thing was bid $425, offered at $475. Okay. Now, how can you sell a box or a condor or for more than the difference in the strike prices? I mean, the only time you ever see this type of phenomenon is when you have a hard to borrow stock that you
you have interest rate carry costs throwing people out of whack there. Yeah. Yeah.
Maybe you have a dividend as well. So we went through the dividend. We went through a couple other factors with the client. Went on Bloomberg, see that it is a hard to borrow stock. Okay, so we say, okay, that's fine. I get assigned on my short $2 calls. I just go ahead and and exercise, my puts or I sell back, my $6 calls. The problem is, and most people aren't familiar with this, but when you're hard to borrow stock and you get assigned, SEC rules make you purchase those stocks in, the broker, not the customer, immediately on the open. Okay? You're buying that stock immediately on the open. Maybe you don't get a chance to sell out your $6 calls, and you have an issue here. You could actually lose on the trade if the buyback and where you close down the position is wider than the credit you receive. Now, 30 cents is a lot, but this trade definitely does have risk. So when your friend or you're in a chat room and they say, hey, I've got a win-win trade here and you can't lose, that gentleman needs to do his homework or call a broker like at Options Express.
Yeah, we used to see these things go up every now and then at these random prices like this in the SPX where, someone had a cost of carry issue. And the only way you could make money on them is if you had, obviously, a better cost of carry than the customer coming in to do it. I'm not that familiar with Mela, but this stuff's looking surprisingly rich. With a week to go, we're looking at, $1.50 for the at-the-money NOV call with 9 days to go. The NOV 6 call is at $1.55. There's obviously some anticipated movement coming in this guy.
I looked for it on Bloomberg, wasn't able to find it. And what was I thinking? I went right to Google and saw that there's going to be an FDA announcement on Tuesday.
Yeah, it has to be. They're paying $1 for the NOV 8 calls with 9 days to go. I mean,
isn't that crazy?
Something is going up out here. Yeah, exactly.
So people like the odd block, but this is definitely one that stood out today as far as like what is going on here, and that you have to look deeper and peel back that first layer and look and see what's going on here. And if people can't short a stock, they're going to bid up those puts and look at those premiums in there. And then this type of stock reminds me of a DN trade from like a year ago. Same type of thing. Stock ends up moving 17. Just horrific the next day with all these questions and what happened and why did I lose money on this and but that can happen if you're short stock. We buy you in at the open and then you got to close out that position. I mean, what type of market maker is going to be closing out? Vol right now is 350 on these options.
Oh, it's through the roof. And the NOV 12 halves are a quarter bid, and the D's 12s are only 30-cent bid. So there you go. There's your something is coming up, and it's coming up very soon in MELA.
So they're either going bankrupt or they're going to solve cancer. One of the
Apparently,
two.
yeah. People are
one of the two.
I'm guessing upside because this thing is just there's decent size for this quarter bid for the NOV 12 halves out there. So this is an interesting one. Yeah, this one normally does about 4,000 contracts. They did 30,000 today. That looks like the bulk of it on that box. If you're a very daring premium seller, I guess you could probably sell a spread just to make sure you don't lose the house on this one.
We used to call that the O'Hare trade, right?
Yeah, exactly. Put it on.
You took a trade on.
Hit the train. Yep, exactly. And if it works out, come back. If not, you're
on your way to a non-deportable country, right? But other than that, I mean, there's just a lot going on in the markets. Like I had said a few weeks ago, people are getting excited about trading again. The markets are near their year highs, if not through them right now. Commodities are going, through the roof, and vol is spiking. I'm a premium seller myself, so I've had fun in GLD and SLV because I think it's a little overdone. But we'll see. People are getting back into the markets, and I'm really happy to see it.
Mike, he thinks silver's overdone. He's taking the other side of your trades.
Oh, absolutely.
Hey, that's why we put the collars on.
Grigas is going to drive it down single-handedly. Didn't you change your name from Hunt a few years ago?
I had to, yeah. Legally, it was decided by the courts that it was a mandate. Yeah.
Couldn't trade anymore under that name. You had to change it up.
And I was his brother.
Oh, there we go. There we go. That explains a lot, actually. All right, John, thanks. That was a very informative spread/express block. And with that, we will close out the spread/express block and move right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on the horizon for the next few sessions. And still earnings obviously playing in maybe more than people anticipated, even given the weight that Cisco is having on the market today. And in terms of other earnings coming up that are interesting, Home Depot, we're always talking a lot about housing and housing starts and interest rates, and Home Depot obviously plays into that a lot in the construction side of the business. As construction fares and as Home Depot fares, so too does the housing market quite frequently. They're coming up with earnings on Tuesday, and then also another Americana name, Walmart, coming up on Tuesday as well. So between Home Depot and Walmart, you'll get a pretty good shot of how the American middle class and the housing markets are doing. And you guys lining up for Black Friday over at Walmart? Is that your thing, Grigas?
Trying to just make sure my wife doesn't spend too much.
You know, I like the Black Friday thing. I like seeing people get crushed to save $10 on a T-shirt. It's I go on YouTube that night and I download and I just crack open a Smithix and I watch the herds go into the no. Actually, I do like the Black Friday ads. I do watch the Walmart ones because they do seem to have the best deals. And for electronics, why not save a few $100s?
If you're buying big-ticket stuff, it does make sense, as crazy as it is to get up and do all that stuff. I think as long as you're smart and you're not going with the hordes for whatever, the $3 laptop at Walmart, you kind of pick your poison, and you get something big like a nice, big screen TV or something, then it can be worth doing. Certainly for those big-ticket items, because those prices are usually never the same again for the rest of the year.
No, you're right.
And Mike, I know you'll be watching quite earnestly next Thursday. Of course, Dollar Tree store earnings.
Oh, yeah.
That's a big one for the Tusaw household.
That's right. That's right.
So that's a big one. It's just an interesting one. I watch a little bit too, just for the curiosity factor. GameStop's coming out on Thursday. And the reason I bring them up is because they kind of remind me of kind of the dream every market maker had back on the floor, where you could be the one market maker in the pit and you can make your market as wide as you possibly can. These guys have figured out a way to do this in a relatively unique niche, which is video game software. They've created a used marketplace for these things that they completely control themselves. So these people come in, they pay whatever it is, $50, $60 for some game that they bought, and they play it for a little bit, and they sell it back to GameStop for whatever arbitrary amount that their internal exchange has deemed it to be worth. Usually it's like a fraction of the value. Then they turn around and resell it again for near full cost. It's a fantastic, fantastic scam, and they've been making
scam.
Well, it's pretty close.
It's only a scam because we didn't think of it first.
Exactly.
It's only a scam.
That's right.
Very bitter.
Yeah, I like how the floor traders are the liquidity providers. They're the American heroes. But then when GameStop does the same thing, that's scammer. Oh, they're providing liquidity for the video game market.
Yeah, there you go.
They're liquidity providers.
They're the put sellers in video games. When no one else comes to play on May 6th, they will sell you your World of Warcraft puts or whatever the case may be. I just find them to be an interesting thing because in this day and age when everyone's saying physical media is going the way of the dodo, everything's going online and digital, here's this company carved out this little niche in physical media and they're making a killing. Kind of just interesting to watch. Not a massive market mover by any way, shape, or form, but one that I always have on my radar is just kind of an interesting little name. What else are you guys watching for the next week or so?
Retail sales on Monday. I think that's going to be pretty interesting to see. That's probably of all the economic news, that's the next big one, so to speak, or that is the next big one on Monday.
Yeah, and we got tomorrow Michigan sentiment. That's the only thing on the docket. We'll probably breeze through that. But, yeah, like Mike said, retail sales start off the week. Hopefully inject some more volatility in the markets, followed up by PPI and CPI. The core is what we look at here. Should continue us through the rest of the week.
How relevant are retail sales at this point when, everything's coming up in a couple of weeks? The big retail sales number will be for, obviously, November and December. This stuff coming up is kind of just a prelude. It's the prelude to the deluge coming in a few weeks when Grigas is lining up for his $3 laptop at Walmart at 4 a.m.
Get my elbow pads on. Get ready.
There you go. Knee pads, elbow pads. Yeah. I think it'll be an indicator of like how where we've been, so to speak. It will be sort of like a rear view. We will be looking in the rear view mirror, so to speak. But I think that it's one to where it could show some things with how we've had a lot of good earnings reports, and I think this will kind of be another part of the story, so to speak, for what's been going on.
You think they'll be bullish then? You're bullish on retail sales?
I am neither. I am curious on retail sales. That's my sentiment, curious.
Of course, you got Walmart on Tuesday, too, and that's kind of the ultimate barometer for retail sales. As Walmart goes, so does the rest of the retail sector. I think that's an interesting show we had today. I want to thank you guys for dropping on by. John, always good to have you. You bring such interesting little tidbits. We'll have to keep an eye on this MELA as it goes up down the road and see what they announce.
Yeah, watch for Tuesday. See what the announcement is, and check the chart. And see, if it's either at 0 or 25. One of the two.
See if these guys paying 25 cents for 100% out of the money calls are actually onto something or not. That's definitely one to watch. And Mike, it was good having you as usual. We also have to thank our guest Tadas from Abnormal Returns. And thanks again to all of you for downloading and streaming the show. And we'll see you again next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.